What's up, you guys? I'm Carson Rouse, back with Business Buzz, where we focus on business, entrepreneurship, and investing. Today, I'm going to be talking about Qualcomm and whether their stock is a buy after rising 15% today. Qualcomm happens to be one of the leading developers in parts used within different mobile devices. You may very well be watching this video on a mobile device that is using a Qualcomm-made semiconductor. This is a very large company. Last year alone, they did over $24 billion in revenue and currently have a market cap of just around $120 billion. So in this video, I'm basically going to be doing a brief overview of their business model, talk about a little bit of their financials, then get into why their stock rose 15% today, and at the way end, I'm going to tell you guys whether I think that their stock is a current buy right now. By the way, you guys, I'd love if you went down and commented what your biggest tech stock investments are. I'd love to see what you guys are invested in tech-wise. I'd love to get some ideas maybe for some videos. And also, while you're down there, you may as well just smack that like button and turn it blue for me. So let's start out with Qualcomm's business model. Their business model can be separated into three separate segments, the first being QCT. QCT is short for Qualcomm CDMA Technologies. If you're not a nerd, you probably have no idea what that means, but I'll get into how the business model works, not the whole technology behind it. In this sector of their business model, they develop circuits and different software for mobile devices. They make this stuff for a range of mobile devices, whether it be a smartphone, a laptop, or even different gaming devices. And gaming is on the rise, so of course Qualcomm could benefit from that. One of their products, for example, it's called MSM. It helps to provide voice and data communications and also geolocation positioning, all this cool stuff, all through a few circuits. And last year, 2019, the fiscal year, this accounted for 60% of their revenue. This sector of their business did. So obviously, this is their largest segment of business, just building and supplying companies with these semiconductors. The next sector of their business is called QTL, Qualcomm Technologies Licensing. Believe it or not, Qualcomm has a huge intellectual property portfolio. They currently have worldwide around 140,000 patents or patent applications. It's with this huge collection that they can grant licenses to different companies to have the rights to use some of their intellectual property in their products or services. Some of these patents are basically essential for making or producing wireless products, so they make a lot of money through this. This sector accounted for about 19% of their revenues last year, so again, an important segment. It did account for a little bit less in 2019 than it did in 2018, though, believe it or not. For the last main business segment, it's called QSI. This is the Qualcomm Strategic Initiatives, and this is just a really fancy way of saying Qualcomm's investments. Last year, it did only account for about $150 million in revenue. However, that is much higher than it did in previous years. For example, in 2018, it only accounted for about $24 million in revenue. And again, investments, they aren't just for revenue. They're good to just have. Generally, their investments do seem to be a bit risky, very early stage companies that are generally around their industry, but they do go out of their industry a little bit with different automotive and healthcare companies that are somehow tech related. One of their big investments is called TytoCare, and it's really cool. It basically allows people to have a virtual, on-demand, at-home examination without a doctor actually physically touching you. So it's basically a doctor's visit without the doctor and at home. Well, there is a doctor, but it's all online. Now let's get into the second part of the video, their financials. So even though Qualcomm is honestly a pretty giant company, they are only the 7th largest company in their industry. There's a lot of competition where they're at. Within their industry, Samsung and Intel are the big dogs, and they kind of dwarf this company, but that doesn't mean that they're not huge. And just to point out something a little unfortunate, they do have a PE ratio of just over 31, which is high even for their industry. For example, Intel and Samsung have a PE ratio of 8 and 18.5 respectively, which isn't too bad for their industry, but Qualcomm, it's a bit out of the ballpark for my liking. On a brighter note, they do pay a 2.4% dividend for those dividend lovers. If you've got a lot of cash and you want to make a lot of cash, that's pretty decent. That's a pretty hefty dividend for kind of a growth stock. And in the last year, they have gone up around 47%. Honestly, this stock has been kind of a roller coaster for the past few years, but overall it's performed pretty decently well, especially since Corona. It is way up. Their price to sales ratio is also at an all-time high right now of around 4.6. Generally speaking, their price to sales ratio generally sits between 3.6 and 3.8, so it's not a good sign to see them there, but their stock price does continue to climb. So now, let's talk about why their stock rose 15% just today as of filming. Before I get into it though, I should mention again that their stock, yeah, it went up like crazy today, but again, it's been performing really well in the last few months. I'm not going to get into all of that, but I will be talking about today specifically. So the rise today happened a lot to do with the QTL sector of their business, the licensing part of their business. More specifically, they just scored a new licensing deal with the Chinese giant Huawei. This is a competitor of theirs based out of China that should be a major beneficiary of 5G through the sales of network equipment and phones. Qualcomm now has a multi-year licensing agreement with every handheld OEM. That is absolutely insane. For those of you who don't know, OEM stands for Original Equipment Manufacturer, and in this case it basically means that all these companies make their own phones in their own factories, and Qualcomm has a licensing deal with all the big dogs. So basically every time a phone is sold by one of these companies, they are paid a fee of the sale. Honestly, licensing is just the coolest way to make money ever. You can just sit back and somebody else does the work for you and you collect your checks. For those of you who don't believe me, just ask Mr. Wonderful. He knows what he's doing with licensing.
You should take it behind the barn and shoot it.
They also plan to score around $1.8 billion from a patent lawsuit with Huawei. So they're going to be getting money from them from the beginning of 2020. That's a lot of cash. Another big reason that their price went up so much was the release of their third quarter fiscal earnings results. To basically summarize what happened, they crushed their expected earnings per share by around 20% with an 86 cents EPS. They also reported nearly $5 billion in revenue just for that quarter alone. So, the moment you have all been waiting for, is Qualcomm a buy? So, Qualcomm has now officially resolved its patenting dispute with both Apple and Huawei. With such an innovative company, diversified revenues, and great profit margins, it's easy to look past their hiccups and questionable financials. I honestly believe that even after the price boost, I think it's still at a pretty fair value and it's worth looking into. All in all, I would rate this stock a buy, but definitely not a strong buy. Honestly, if I were you and you really wanted to get your hand in this stock, I would wait and see if the stock drops below $100. I think that's a great deal for this stock, so just be a little patient. Keep in mind though, this is a growth stock and I'm definitely more of a value stock guy, and I'm just better at analyzing those stocks, so this is all your choice. Definitely do your own research. I'm not an expert. However, I do see this stock slowly becoming more of a value stock over the years. I don't think it'll be a major growth stock much longer. So with that said, are you considering investing in this stock? Let me know down in the comments below. And if you like this video, you either gotta like the video or go subscribe. Like, you literally gotta do one of the two. Anyway, I'll see you guys next time.